Hello everyone and welcome to the channel. It seems that comment I made in the last video about how something like 90% of my net worth is outside of the United States really raised some eyebrows and attracted a lot of attention in the comment section. And it seems that there are a lot of commenters who are really interested in investing internationally but aren't sure how to do it. So this video will be talking about exactly how to invest internationally from a very beginner, lazy level to more advanced strategies. And I can tell you, I more than anyone understand wanting to invest internationally. I've been ranting and raving that more investors should look internationally as long as I've had this channel. If you want to see some examples on the second episode of the Eugene Exchange podcast, I talk a little bit about international investing. And then in this video I have here, I reviewed a $20,000 stock portfolio that actually doesn't have a single US-based stock in it. It was really crazy. I recommend you watch that video. I think the reasons why an investor would want to invest in foreign stocks and internationally is pretty obvious, but I will do a recap. So why should you buy foreign stocks? I think it boils down to the following reasons. Despite how interconnected the world has become in the past few decades, there still is security in having your money so far away from everything else. Distance can mean security, right? So some investors are concerned about an economic downturn in the United States, and in theory, having your assets abroad could hedge your bets. Because in that scenario, say maybe your money at home in your home country collapses, but in that case, your foreign investments wouldn't, and you would do fine. And considering how the US botched its coronavirus response and the rest of the world seem to have fared much better, I understand why more investors are thinking this way. So after security, I think the second reason why investors want to invest internationally is because they want to catch opportunities that many other investors are missing. Because let's be honest, I've seen it, you've seen it, everyone's seen it. Flat out, most investors have most, if not all of their stock portfolios in United States stocks only. And I'm going to tell you straight up, you are missing out on opportunities if you don't invest internationally. Because while it is true that the United States accounts for half of the world's stock market, I can promise you there's a lot of opportunity to be had in that other half, the international half of the world's stock markets. Trust me, I've seen it. So to help you learn how to invest internationally as a US-based investor, I'm going to show you, starting from the laziest strategy, literally a two-click strategy, all the way up to more advanced strategies that I've had success with, how to invest internationally. So let's begin. So starting off, here we are with the ETF, ticker symbol VXUS. I've talked about this in previous videos, but I'll go over it again very quickly. If you don't have a lot of time and you want to be internationally exposed and move on quickly, consider buying this simple XUS ETF. And so what this is the Vanguard Total International Stock ETF. It's pretty simple how this works. You buy it, and then you get exposure to 7,000 international holdings. There are no US companies in this ETF, and you get exposure to the following countries. There's also a sector breakdown for VXUS. And of course, you can find all this information I'm showing you on ETF.com. So to buy this, all you would do is go to your brokerage of choice, click the buy button you see over there, and you're good to go. There's only one downside to VXUS, and you can see it right over there, is that the expense ratio is 0.08%. And if we go to VOO, which is the Vanguard US-based ETF, you can see the expense ratio is only 0.3%. So you can see that the VXUS expense ratio is much higher, though I will say as far as ETFs go, that's a very low expense ratio. You won't be losing that much money over this expense ratio. International investing is always going to have more hurdles compared to domestic investing, and at times you are going to have to pay a premium if you want to get international assets. It's just how you play the game. But for most people, myself included, that price is worth it. The next, slightly more advanced strategy is to find ETFs that focus on specific countries rather than buying a super broad ETF that might be buying in countries you don't necessarily like or don't necessarily have faith in. So for that, you would go to a page like this, which is a list of the iShares ETFs by BlackRock. I'll have a link to this down in the description. And from there, you'd pick an international ETF in a country you think has potential and you want to invest in. And which one you pick is entirely up to you. There are some investors who swear by Brazil. You can search that right here. And boom, we've got Brazilian ETFs. But there are others. So for example, if we search Japan, you can see there are a lot of Japan ETFs, but interestingly, there are even special ETF products where you can exclude Japan. So there's an example right here, AAXJ, it's an iShares All Countries ETF. In Asia, except for Japan. I don't agree with this, but I think the reason some investors would like to exclude Japan when they're investing in Asia is because they're still shell-shocked by the 1980s, and I get that, but I do think, frankly, there is a lot of potential in Japan, and I've seen it. And I do like that Japanese companies do consider it a priority to pay dividends out to their shareholders. But anyway, which countries you invest in, which countries you even want to exclude, that's entirely up to you, and there are all kinds of ETFs catering to different strategies and catering to your ideas. One thing that's very important to consider, though, is that not every country shares the same economic system or investing values that the United States does. And just putting it very bluntly, not every country is about international finance markets or capitalism very broadly. So if you want to invest in certain countries, buying an ETF may not be the best strategy, right? So for example, in countries where the government has all the powers, Again, these corporations are going to be very, very weak. You may not necessarily get the best treatment as a shareholder, so you do need to be more careful with this strategy, and you do need to invest in countries you understand better. So for example, I love Vietnam and the potential it has, but in the case of iShares, guess what? With iShares, you can't buy a Vietnam ETF. And this is the case because, frankly, Vietnam's economic system is not concerned with your ability to buy ETFs in its companies. They aren't as concerned about shareholders in the sense that we are. And that's okay, it's a different country, that's their way of doing it. It doesn't mean you can't invest in Vietnam, but this is an example of how you can't necessarily do it very easily through an ETF. And you know, one thing to consider is that while there are stock exchanges in a company like Vietnam, this isn't the only example, most of the explosive growth in Vietnam right now has been on the street level. We're talking small businesses, and innovation is really thriving there along with production, but you can't see that growth as much on the Vietnamese stock market or the bigger companies listed there. So you're gonna have to navigate each country's economic system. So after all these ETFs, that naturally leads us now to the next most advanced strategy, and that is buying individual international stocks. You can, in fact, with some brokerages, buy international stocks. The difficulty, though, is that understanding and researching these companies is a lot harder because, frankly, you're going to have to navigate the different rules and regulations of different countries, and often, too, you're going to find that other companies have a language barrier to understanding what's going on. So, for example, I made a video about this portfolio you're seeing right here, and what this is the investing portfolio of a subscriber that I made a review on. You can watch that video on this channel, and this portfolio is filled with foreign companies. There's not a single US company in this portfolio. You can see Canadian companies, African-based companies, Australian, British companies. It's really crazy. This subscriber's portfolio, which is only small micro-cap foreign stocks, mainly in mining and commodities, you can see the total gain in just about a year of investing is 77%, almost $10,000. This is proof that it can work. So if this is your strategy, if you like putting in more time and research and more understanding, international stocks can be an option for you. In my case, we're on Fidelity now right here. I bought a Polish company called CD Projekt Red. They're behind the Witcher series of games. But you, of course, can do anything, right? If you have a lot of knowledge in a certain industry, you can find foreign international companies that suit your interests and suit your investing strategy. If you have a talent in one area, it's safe to assume you can take that talent internationally. Now, if you want to buy individual international stocks, I've found that with brokerages like Robinhood and M1 Finance, many foreign stocks just straight up aren't available. You literally can't buy them. So to buy individual foreign stocks, I recommend the brokerage Fidelity. That seems to have the most availability of foreign stocks. Again, you have CD Projekt Red on here. That's a Polish company. We can search another example. The company Helium 1 is based out of Tanzania. It's a helium extraction company. It's available on Fidelity, so that's the best one to use. Now, the final 150 IQ strategy, and this is probably the least passive and will take the most amount of your effort and time, is physically going to a country of your choice and finding ways to invest in it. So this can take many different forms. You can buy real estate, for example, which, by the way, one of the upsides of the strategy is that when you buy foreign real estate, you can read it right here. You don't have to report foreign purchased real estate to the IRS. That seems really powerful, not having to report, not having to deal with foreign real estate assets. Now, of course, everyone's tax situation is incredibly complicated, so please, please, please get the proper tax advice. I'm sourcing this information from a CPA. I'll link this down in the description. You can look into it yourself, but that's definitely an option, right? So there's foreign real estate. And I will say foreign properties markets have had insane opportunities in the last few years, and the fact that you don't have to report it definitely is an upside. There are also all kinds of investing programs abroad in various different countries trying to attract investing dollars from expats and other people, right? So you can invest in public works projects, foreign bonds, government bonds. There's all kind of things out there. There's way too much for this video to talk about. But the point of this is to show you that there are strategies out there that require, yes, boots on the ground, but they're more engaged and they have more opportunities than just buying the simple 2-click ETF solution. And if you're willing to put in the time, you can find some crazy opportunities abroad. Just know that they're out there and I've seen them. I can tell you so many stories I've seen or people I've seen about land speculation in foreign countries, setting up cafes or sports bars in the right countries in different cities, Airbnb investing. It's really crazy. And maybe someday I will make videos about these stories, or maybe I'll make videos about those stories for channel members. So if you want to become a channel member and see behind the scenes, more detailed exclusive content, click the join button down below and YouTube will explain the membership program for this channel and how it works. So if you want to get started investing the right way, I do have links down in the description for M1 Finance for beginner investors, and then also Webull for more advanced investors. Now, of course, remember, if you're investing internationally in individual stocks, I have to recommend Fidelity. There's no affiliate program or kickback for that. I just genuinely think it's the best brokerage for international investing. Anyway, that's all for this video. I want to thank you for supporting the channel. The growth has been insane recently. I think we're going to be getting to 10,000 subscribers any day now. Really appreciate it. I'll see you in the next video.